Welcome back, investors, to Ticker Time News. I'm Adam, and Adobe, ticker symbol ADBE, is not off to a great start in fiscal year 22. The digital document giant reported just a modest beat for Q1 and issued downside guidance for Q2. During the pandemic, Adobe benefited as companies and consumers both embraced digital document creation and launched digital storefronts. Entire industries had to pivot nearly overnight to digital-first operations. However, growth has begun to slow over the past couple of quarters for Adobe. Now, don't let your portfolio slow down too. Beat this crazy market with us by clicking the first link in the description. Okay, Adobe reported EPS and revenue upside in Q1, but its beat was much smaller than what investors were used to from the company. Also, Adobe issued downside guidance for the next quarter for the second time in a row. A year ago, Adobe was consistently guiding higher, so this is a notable change. Adobe notes weakness in Europe due to the conflict in Ukraine is a factor bringing its outlook down. Speaking of guidance, Adobe did not provide annual guidance like it did last quarter. Maybe we could infer that there was no change, but Adobe did not explicitly reaffirm its outlook. This may be spooking investors too. On the earnings call, management did say that it expects quarterly revenue and EPS growth in Q3 and Q4, but did not provide any numbers to back it up. Digital media, Adobe's largest segment, which is comprised of creative and cloud document, saw revenue grow 9% year over year to $11.11 billion, a bit better than prior guidance for 8% growth. However, it was still a noticeable drop from 21% growth in Q4 and 23% growth in Q3. Now, I guess the silver lining is that Q2 guidance calls for improvement, forecasting growth of 13%. Now, Adobe has been lapping tougher comparisons, I'll give them that, but the overall trend is still discouraging. Adobe's other big segment is digital experience, which allows businesses and management to track customer experiences using analytics. Segment revenues grew 13% year over year to $1.06 billion, exceeding prior guidance for 11% growth, but also declining from Q4's 23% growth. A bit of a rebound is expected in Q2. Guidance does call for 15% growth. Now, looking ahead, Adobe will be implementing a new pricing structure starting in late Q2. It's the first real change since 2017. This should act as a tailwind in the second half of 22. Bottom line, Adobe blew away analyst expectations for much of the pandemic. However, its back-to-back modest beats and downside guidance are worrisome. Adobe, like certain other software companies that gained traction as a result of the pandemic-induced acceleration of remote work and digital work, I'm looking at you, Zoom Video and DocuSign, they may be starting to feel their results pressured by the combination of lapping their pandemic boom while encountering improved conditions for people to head back to work. Now, Adobe stock has taken a big hit, falling over 40% from its $700 a share high back in November of 2021. But that's the market psychology right now. If you're not beaten by big numbers, you're falling. So what do you think about Adobe's earnings and guidance or lack thereof? Let me know in the comments below, as your comments help us all to better understand this stock. Smash that like button, share this video, and beat the market with us by clicking the first link in the description. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.